Hello everyone, it's time for this week's market analysis. On this channel, we break down trading strategies and insights in a way that's easy to understand, all through chart analysis based on Dow theory. If you want to dive deeper into the methods we use, there's a link to an explanatory video in the description. Be sure to check it out. Let's get as good at technical analysis as a raccoon is at using its paws, crafty and quick. If you found this video helpful, please give it a thumbs up and subscribe to the channel. Now let's jump into this week's market. Let's now take a look at the EURUSD chart. First, I'll go over this week's price action. This is the weekly chart. This week, the market formed a bullish candle with an upper wick. Similar to last week, the market showed very little movement and continues to lack clear direction. Compared to the previous strong uptrend, this pullback has been relatively shallow, which means we need to be cautious if considering long positions. Currently, we can interpret this as a sideways correction. Moving forward, we should also consider the potential for another drop or continued range-bound movement. The key focus will be whether the weekly uptrend can resume by breaking to new highs. Next, let's look at the 1-hour chart. The yellow vertical line marks the start of this week. The market opened with strong upward momentum and broke above the recent high. Higher highs and higher lows were clearly forming on the 1-hour chart, establishing a well-defined uptrend. However, after the NFP release, the market broke below the 1-hour key support, confirming a shift to a downtrend on this time frame. Overall, while a series of higher highs and higher lows had been forming, the pace of the rise was notably slower compared to the previous uptrend. This suggests increasing selling pressure, making it a market where entering long positions should be approached with caution. Now let's go back to the weekly chart and analyze the market in more detail. Based on Dow theory, breaking above this resistance line confirms an ongoing uptrend on the weekly time frame. However, since the market is now trading in a high price zone after a strong rally, it's important to be cautious when considering long entries. The presence of both upper and lower wicks here indicates a tug of war between buying and selling pressure. In this area, the most prudent approach is to look for potential selling opportunities near the upper range or buying opportunities near the lower range. Key resistance levels that could serve as future targets are these two past pivot points that triggered major trend reversals on the weekly chart. Now here's the daily chart. The structure remains intact with the most recent swing low still holding. As long as this level remains unbroken, the daily uptrend is technically intact. The current pullback has been shallow, not even reaching a 38.2% retracement of the prior uptrend. Therefore, another test of lower levels remains a possibility. If a deeper correction occurs, it could provide a better opportunity to enter long positions. With both the weekly and daily trends pointing upward, ideally we would like to buy on pullbacks. But given that the market remains near the high price area, it is better to stay on the sidelines for now. Next, the 4-hour chart. The market is currently moving in this pattern. We've seen a series of higher highs and higher lows, and the most recent swing low is holding so far, meaning the uptrend is still in place. This rising channel is a useful guide for monitoring trend continuation. Now, the 1-hour chart. Until recently, the market was forming clear higher highs and higher lows. But after the NFP release, it broke below key support, confirming a downtrend on the 1-hour chart. The key resistance is now here. This is the level that triggered the 1-hour trend reversal. Summarizing the trend across time frames, the weekly, daily, and 4-hour charts remain in an uptrend, while the 1-hour chart is in a downtrend. The longer-term uptrend remains intact, but since the market is trading in a high price zone, it is wise to avoid impulsive, lower time frame entries. For now, we see both vertical and horizontal corrections playing out after a significant upward move. Now let's talk about potential trade scenarios. First, the bearish scenario. Since this is a long-term uptrend, the ideal timing for short entries would be after the trend has extended further. The expectation is for the market to make another new high first. This typically increases the probability of a correction because price tends to extend away from the 200-day moving average before pulling back. If we look at past price action, Corrections tend to occur after significant deviations from the 200-day moving average. At the moment, the market is still near the moving average, so counter-trend short entries carry more risk. The best short scenario would involve a breakout to new highs, followed by a sharp pullback from a weekly resistance level and a confirmed reversal on lower timeframes. If you are considering trading such a correction, it is safer to wait for at least a 4-hour reversal first. However, given the ongoing long-term uptrend, this is not a market where you want to take excessive risk on the short side. Next, the bullish scenario. The long-term trend is still up, but it is important to stay aware that we are in a high-price zone. There is a real possibility of the market entering a consolidation phase, such as a triangle or an N-shaped correction. Therefore, caution is required for any long entries as well. If you are considering buying, it would be safer to wait for the market to return to this key support area, which marked the start of the last strong rally. In that case, be sure to confirm the setup on lower timeframes. As always, next week, remember the core trading principle: sell high and buy low. Staying disciplined with this mindset will help you trade successfully. Did you find that helpful? If you did, please give this video a thumbs up and subscribe to the channel. Next week, let's be as skillful with technical analysis as a raccoon is with its paws, and trade with the same caution a raccoon shows in the wild. I wish you all successful trades. Best of luck.